All right, end of the week wrap. This will be quick. Just on the Aussie market, this is the Aussie futures. Going back to the COVID thing, there's a few things still in play. Obviously, this double top here, which is still in play for unfolding, to unfold lower. Notwithstanding the concern of these long wicks, which we've seen, which are a pretty bullish turnaround, and you can see this price action here, it really is quite bullish, right? So that's something to watch. You can see that pattern in the weekly on a larger time frame that happened in the low here. This is the COVID low. It had the big leg down, had the long wick there, and then turned back up. So that is still in play in our market. There's a few key levels where it has retraced to. Here we go. And it has bounced from. You might remember that 73.50 level. So I'm still short. And you can see like right there on the ding, on the dong. That was a good level to be short at. So you might remember I was looking at shorting it here with a stop there, but then I looked at it and said, look, no, actually that's the better place to be short. I had shorted it further down here, like around 73.36 was actually the level I got set at. But it stalled there. Few good reasons for that. Obviously the 61, that's quite a good retracement level that it obeyed. Also this previous support, which had become resistance on the way down. It is still unfolding lower. The question is how much lower. If it starts breaking here, it really is a bit on for young and old. And if it breaks down below here, it will go, very confident, down there. That's what I'm looking for. Maybe the best trade all year could be like some, December, 7,000 puts. That could really pay off in a big way. I'm not going to do that. I'm not a big buyer of vol. I think retail punters totally get ripped off when they're buying vol. Being a guy that used to trade these options for a bank, buying options, it's generally, in terms of vol terms, it's a rip-off. On the cash market, you can see obviously the similar thing in terms of the futures. Again, the levels that it bounced off at. The charts are a bit different because a whole lot of dividend, about 100 points of dividends rolled out of here during that period, which explains why there is, the roughly 100-point gap. The futures, you can see, they made a double top here. These ones have stepped down. Similar thing though, in terms of not that level, in terms of the Fibos, just to be quick. Obviously the 38 here is different, right? Because of the issue of the futures roll and the dividends dropping out. So the dividends and the roll basically changes this Fibos by the 100 points here. You can see 74.68, 73.66, 100 points, which was the value of the roll, the value of the dividends dropping out in this period here. So it's turning here. I think there's quite a good chance. It's going to have a bit of a breather here. A similar thing, if it breaks 7,200 in the cash market, 6,800, bit higher, that's 6,900 is definitely in play. And longer term, I really got my eye. That's a very big gap in the cash market. There's a gap in the futures market, which is a little bit different from memory. Yeah, there's just a little one in here that it might come back and fill. That is would be an ideal target for my positioning. That's what I'm watching. It's still rolling down from the daily RSIs. It hasn't got oversold on a daily basis. It's going to bounce back from the 4 hourly, which is indicative of a first leg. If it starts to roll down, that'll take the shorter or the longer time frame with it. That's the 2 hourly. I'm not sure if I got yet. Got just almost overbought on the hourly, which again is reflective of that. It's a great level to be short at, which luckily I have been. and I hope to ride it down, at least down to this range and possibly, hopefully, further. Have a good weekend. Okay, ciao.